after I hung up the cleats, finance became my sport. So
I was the kid that was told I would never be able to achieve the things that I did achieve.
Bounce around to a few different multi-billion-dollar firms that you're probably well aware of. So never a dull moment, I should say. So I said, good, I don't want your money. Diversification is always your friend. When you're the most liquid, you'll never have like the best opportunities, but when you're not liquid, the best opportunities will come at you. One of the biggest mentors to me was my college lacrosse coach, Dave Webster. You'd be very shocked and very surprised at their lack of sophistication. They're looking for 5 to 15% EBITDA positive. It's insane the fact that NVIDIA, I'm just looking at the screen here as we're speaking, NVIDIA's down 6%. And they just beat raised.
Even if you fail at a startup, which most people will the first time, no matter what, if you execute well, you have a community, it'll be fine.
If you have passion to make hot dogs and you want to be a hot dog stand, like do that. Before you do anything, I think it's prudent to categorize the pros and cons of a decision that you make, and that way, when you do something, you'll never look back and regret it. Controlling your emotions is huge, man. You cannot let your emotions, especially within trading, $500 million book. Hopefully Sandbox AQ's IPO, the beginning, man. We're just getting started. We have a studio here in the Trump building. Yeah, man, come by.
Yeah, let's take the podcast there. Let's make it happen.
Yes.
Welcome to Disruption Now. I'm your host and moderator, Rob Richardson. With me is Jacob Frankel with Beyond Alpha Ventures. He's been an entrepreneur. Now he's on the investing side, so he's seen it on both sides. And, I can tell you from accidentally overhearing some of his conversation, he's a man that moves quickly and is really good at convincing people and understands how to create value and propositions. So for all you founders and people that are thinking about raising, this is a conversation you really don't want to miss, because he's literally in the middle of New York, closing deals, closing some of the biggest deals. Again, overheard some of the conversation. I won't tell what the deals were, but they were some big deals, unless you want to talk about it. Jacob, how you doing, man?
That's as well. Feel free to call me Kobi as well. And thanks for having me on here, Rob. And
I wasn't sure, like Kobi. You want? Okay, I can call you Kobi. You like that? You go for the
look, I'm white, small, and Jewish, and played professional lacrosse, not basketball. But I like to think that after I hung up the cleats, finance became my sport. So I think if you apply that kind of mentality to anything in life, you'll be successful, right? So
yeah. So the Mamba mentality, I love it.
Exactly.
So let's talk about you. So what is your story? Who are you? And as I preface that, I tell people I was the kid. I was the kid that was told I would never be able to achieve the things that I did achieve. And, I haven't been proving that teacher wrong. I've been proving and defining myself right for all of my life. That's my story. But who are you?
Great question. And I like that a lot. And look, I come from, a family that traditionally was not in the finance space. So for me to kind of venture out of the family business, so to speak, was a little bit foreign in my parents' eyes and everything like that. And so I've always kind of prided myself on being financially independent. And again, being a former professional athlete, playing lacrosse for, likes of the Israel national team, for example, I always applied myself, very aggressively into anything I've done, kind of one speed only guy. And essentially, after, internship on my junior year of college, my parents wanted me to effectively be a lawyer. That life was not for me.
You made the right decision as a reformed lawyer. But go ahead.
Yeah. I mean, it was a little bit too mundane. The office environment was a little bit too tight for me, and I ended up having the pleasure of interning at a firm called Laidlaw, and was a sponge, and they offered me a job right out of college, and effectively from there got my Series 7, 63, yada yada, and bounced around to a few different multi-billion-dollar firms that you're probably well aware of. I ended up getting recruited to work with PayPal back in 2018. We started Loan Builder. Went down to Philadelphia. We scaled out, it was 16 people when I got there, to 327, which is now today Loan Builder, if you probably get those things in the mail for business loans. But yeah. And then after that, I left.
Before you go down, I want you to continue, but I like to.
Yeah, go ahead.
really get an idea of a concept of like when you knew that you wanted to spend your life this way, that you wanted to spend your life in finance and deals. When did you know that? How did you come
Hmm.
how did you come to that revelation?
Honestly, at an early age, I always knew that, I wanted to, make money. And one of the things that um, I guess when I left, I guess I should say, well, one of the moral conflicts that I had in life, and kind of was a teaching lesson for me was, and don't get me wrong, there's a lot of money to be made in business debt financing. And, mezz debt and private credit right now is a massive topic. You probably see all over the news. But for me, I'd rather be generating, and creating generational wealth for individuals, family offices, institutions, and just angel investors and regular average retail investors. I get more pride and passion in doing that when you're getting a call from a client telling them that, the investment that they just made, paid for their daughter's wedding, is much more, satisfying for me than speaking to an institution which we gave Square at 2 billion or Facebook at 13. And, next deal, they're just like, all right, we'll take a look at it.
Yeah.
So it's, for me, it's about the passion that I have, about, really impacting people's lives and making a difference there too.
Yeah, Kobe, you mentioned something that about the family business, and I don't know if that was just a side or a reference, but like, what, what did your parents want you to be when you grew up? When you grew up?
Yeah, so I mean, my mother really wanted me to be a lawyer. But I come from a family where my father's and my my aunt is kind of bona fide the number one celebrity hairstylist in the world, and my father owned New York Beauty Supply LLC, and my uncle owned um, the largest commercial HVAC company in the tri-state area. Putting every
And the tri-state area is
skyscraper.
New York, right? That's what we're talking about.
Yes,
New
yes,
York. So
yeah.
you're talking
I'm,
about a
I'm,
big
I'm
tri-
located. Yeah, yeah, I'm located here on 40 Wall Street, right in the heart of the financial district and the Trump Building. So never a dull moment, I should say. Here on Wall Street, you walk out of the office and it's a scene from a movie. So,
How was that
so
conversation when you told your parents that you didn't want to be in the family business?
uh, they said go and do it, but we're not paying for it. So I said, good, I don't want your money. So, you know, that's kind of how it went. Since I was 13 years old, so kind of paid my own way.
Yeah.
I think that's how you have to have, how you have to have mindset, right?
So you've always had the Kobe mindset. So Kobe, because I know you go by Kobe, but Kobe failed a lot. I would love to hear a time when you failed and
Mm.
how that informed you or helped you become a better entrepreneur or investor.
Oh, great question. Great question. So 2019, I wouldn't say technically it's a fail. I mean, technically we were up 300%, but this investment we had deployed $62.5 million into. I won't name the company just due to compliance purposes, but um, it was a digital remote patient care monitoring company during COVID. I'm sure you're probably familiar. A lot of hot, like sock doc type companies were coming out, right? Because no one could leave their homes, right? And I was involved with a hedge fund that essentially was taking advantage of that, as well as a Puerto Rico bank license to utilize, the 4% corporate tax there and compound investments in a much more tax efficient and tax friendly manner. So shave off 16 to 19 basis points on your investments as well as just the ROI that you're getting. But one of the things that I learned and had kind of the hard way to learn, I should say, is diversification is always your friend. You can never have enough cash on the sideline, because there's always
You were up
in my life.
300%, but was so something must have happened in between there. So
Well, not yeah. What I'm saying is, in life, opportunities will come at you, and when you're the most liquid, you'll you'll never have like the best opportunities. But when you're not liquid, the best opportunities will come at you, and you don't have the money to put into that. If that makes sense.
that's actually
So
powerful, right? Because that's
yeah,
something,
yeah,
that's a mic drop moment people should think about, right? Because people always think, what if I miss this moment? But if you're not ready for the moment, you're gonna miss it.
exactly. So I know my thing is be very disciplined. I think you need to be very disciplined. Always it's all about look, you can never know enough. If someone thinks they know everything, they don't. At the end of the day, what makes a marketplace is perspective, right? Even on the stock market and the public trading side, at the end of the day, if you can forecast and predict how the market is thinking, how the sentiment of the market will think on future events that will take place, if you look at the calendar, and play the calendar, that's how you become successful and effectively become a predictive analytical machine, right? But it's about kind of being able to sense, how the other side of the table is thinking, and when you can put yourself in the shoes of others, and whether you're doing business or even in your personal life, I think you'll be much more successful in whatever you're trying to achieve because you're effectively allowing yourself to see their perspective, right? And perspective is what makes a market, right? On the other side of a trade, there's always someone selling, there's always someone buying. So,
Yeah.
yeah.
It's so, but the harder part of that is the people are also irrational. So they don't expect, that's the reason for the diversification and the liquid conversation you mentioned earlier. So I'm curious about your value system. Like, what mentor or person in your life shaped your value system?
Mm. Yeah, I'd say one of the biggest mentors to me was my college lacrosse coach, Dave Webster. Um, he's a Hall of Fame coach. He's someone that kind of installed in me at a young age, what the term grit was, and kind of just you can never be too big and never be have too much money to essentially get your hands dirty type shit. If that excuse my language, if that makes
Oh,
sense. And
yes, it's disruption. We don't care.
yeah, yeah. And that's really kind of one of the things that, has always stuck with me since I played lacrosse in college was, having to wake up when I was in college and run a mile and a half in under 9 minutes just to be able to play on practice, you know, just every day for 4 years of your life, kind of creates a little bit of character that alone. But yeah, I mean, he was a very instrumental figure in installing, what I would call grit, and kind of determination, right? And when you set an objective in life and you set out a mission statement to do something, you either do it or you don't. And that's, something that stuck with me. Because otherwise you're just leading false narrative, or you're not being real with yourself or being real with the people around you that you're telling someone you're going to do, right? So
Right.
that's another thing that, especially within finance, where your
Before you
reputation
go
is.
that, really, if you can,
Yeah,
Kobe, really quick, I'd like to.
yeah, go
So
on.
sports means a lot to you. Clearly, that you've
Oh
gone
yeah.
back to that reference a lot in your life, and you know, obviously wanting to go by Kobe in your middle name there, it means a lot, right, to you for just if you want to that shaped you. Can you think of that moment though? Can you think of any moment in sports in terms of a defining moment when something was really didn't turn out the way you expected, and that really kind of formed and shaped who you are?
Yeah, yeah, man. Look, I probably shouldn't say this, but um, yeah, I mean, look, in high school, I'll be very honest. I was like a prodigy lacrosse player. I had my freshman year, I had full ride scholarships from every single Ivy League school except for Harvard. For some reason, Harvard hated me. I don't know why. I had every Ivy school, Yale, Brown, Dartmouth. Brown and Dartmouth were my top two, which I had verbals on. And I'd gotten pulled over for having some marijuana in my car driving to school one day, and my full rides got dropped. I ended up going D3 to Dickinson. Did compete for a national championship, but at the end of the day, I look back on that and tell myself, look, maybe had I gone to Dartmouth Brown, I'd be sitting in a Goldman Sachs $300,000 cushy salary, cookie cutter job, and that would be my day to day 9 to 5, basic bitch ass life. But that's not what I wanted in life. I wanted that uncapped kind of structure that you can kind of create your own. What you put in is what you get out model, and that's one of the reasons I started Beyond Alpha was because after, um, you know, about over a decade working in the industry on the street here and kind of just seeing the ins and outs of what people see on TV of Wolf of Wall Street, right? For
Right.
example, it's some of it's reality, some of it's not, but most of it is. But a lot more they don't see.
Yeah.
But no, but at the end of the day, when it comes to the actual business side of things, what didn't resonate with me, and I don't know if it was whether maybe because I came from the background I did, but um, I just didn't like the fact that the commission model was 1 to 5% into a trade, 1 to 5% out of a trade, meaning that the PMs are you have PMs like CEOs of huge private equity firms. They employ their stockbrokers or bankers, and their bankers and brokers are going out to their clients, right? So the clients are either winning or losing on whatever the trade is. The brokers are living paycheck to paycheck, making a commission off of that deal, and the PMs are sitting up there every single time, win or lose, they're making their money because of
Yep.
all the volume, right? And so that whole model, in my opinion, was just completely fuckery because at the end of the day, their interests aren't aligned, right? So how can you be in business together if your interests aren't aligned? So what I decided to do was create a financial engineering model that essentially has a venture capital kind of structure, where in venture capital, the reason that people are most likely, uh, most of the time, successful in venture capital is because they have their interests aligned, with the private companies that they're working on, because they don't have to report to regulators and do whatever they have to do, so they can get crafty and get very creative. And so I created a 2 and 20 structure with a 25% watermark, saying that, look, if we don't break 25% a year, we don't get paid. So that way our interests are directly aligned, and we're not just whacking you with a fee in and out of a trade.
Yeah.
So that we're either going to make you money, and if we don't, we don't make money, and if we do, we make money. So
Kobi, why was it you that created Beyond Alpha Ventures? Why was it you?
I just felt like someone had to do it, man. At the end of the day, I'd gotten pretty. Look, it wasn't that the money wasn't good. The money was very good on the street. But I just, wearing that suit and tie every day and seeing the people that were actually, and really getting to know the people that were behind these multi-billion-dollar institutions, you'd be very shocked and very surprised at their lack of sophistication and lack of intelligence, in terms of, as I go back to the most important thing, diversification, one of the biggest life lessons I've learned. And, at the end of the day, um, I say that because, all they care about is volume, right? They just care about eating off of their guys on the floor who are salesmen, not really investment advisors and financial professionals as we quote unquote think them to be. And that's one of the problems with the stigma or the reality of what Wall Street has become, is that a lot of shops out there have that culture that isn't practicing the right principles, right? And so that's why I thought there needed to be
Black
a
sophistication does
firm
not
that does.
surprise me, by the way. But go ahead.
Yeah.
Yeah, I remember. I think it's President Obama that said this, but it resonated with me that when you get a seat at the table and you sit next to people, it also helps with your confidence, because you're like, oh, these people aren't that smart. These people aren't like magical people with magical powers. These are, a lot of them are normal people that have good networks or have figured out one thing very well, or just inherited something, right? But like, it's not that these people are beyond you or me, right?
Yeah.
It is achievable, but like being in those circles kind of really helps you see that, right? Because it's
I
like,
tell
oh,
I tell that to my guys on the floor all the time. I'm like, look, at the end of the day, it's just another guy on the phone. Stop getting so nervous, man. Look, yes, they may have a lot of money, but they still have the same problems in their day to day. Their daughter's doing this, or their wife's cheating on them. They say, they still have problems in their life. They still, get an itch under their armpit just like you do. Like,
right.
it's just, they are just human beings. So, at the end of the day, you have to resonate with people and connect with people on a personal level in business, that feels well. And if you can't do that, you won't be successful. That's another thing. You can be the smartest. You can be the smartest person in the world. I've seen very smart people who've had phenomenal ideas and phenomenal products and stuff like that, but they just haven't had the ability to convey them and connect with people. And that's why their business or whatever it is successful, is because they don't allow themselves the opportunity to connect with the people that they need to ensure the success of whatever they're trying to do, right? So that's huge.
So you do invest in startups, right? So the Beyond Alpha Vision does that. So let's talk about startups in the current climate right now. Um, what do you see as some of the biggest kind of differences in the climate now versus 5 years ago? 5 years ago, it was, you come up with any type of concept or idea that people found and you to be scalable, and you were fit the right profile in the right area, you would pretty much get funded. I feel like that's changed a bit. Like, what do you think is the difference now, and
Hmm.
how should founders be thinking about the landscape now?
Yeah. I think now a lot of people are looking for more, I guess, fundamental plays, right? A lot of the family offices and funds that I work for, and hedge funds that we work with, I should say, They're looking for 5 to 15% EBITDA positive, right? Uh, right industry, AI, cyber, quantum. They're looking for companies that have, a good balance sheet, not a lot of debt, some decent cash, and obviously, the most importantly, a good business model that has a fundamental trajectory showing that the company is going to sustain that business growth, right? Like even I think it's insane the fact that Nvidia. I'm just looking at the screen here. As we're speaking, Nvidia is down 6%, and they just raised, right? Like and back in the day, if you beat your guidance, you beat your EPS and you beat your numbers and you raise your guidance, your stocks usually go through the roof. Now they're down 6%. So it just kind of goes to show that we're in a market environment right now where, look, let's face it, geopolitically, some could call this World War III, right? What's going on in Ukraine, Israel, and um, you know, Russia and Syria and Lebanon. It's real stuff that's going on there. That's why we're actually investing in a lot of companies that are doing some serious stuff over there. So
No, it makes sense. So, if you're advising startups, like what's the common thing what's the most common thing I'll say that startups get wrong when they come to approaching like getting the venture capital funding?
hmm. So I mean, it's not that they get it wrong. I think that they kind of jump the gun sometimes. One thing that startups could do is kind of take a flip in the page book, or take a page from kind of the public company perspective, right? Like look at a public company and tell yourself, if you run your startup like a public company from day one and you get audited financials, you have a clean back end accounting system, right? You have, a very clean infrastructure. It's all about infrastructure, right? If you create an infrastructure that's scalable, and you have a flywheel distribution model, that's what I believe in. I was mentored by a gentleman named Richard Dahan. He's an MIT professor, and he taught me the Pareto capacitor model, which is, the 80-20, right? So you could have at Google, 80% of your employees are getting 80% of the salary, but 20% are really doing 100% of the work, right?
Right. Yep.
So essentially, it's similar to VC, where in VC, you can have 30 investments, 20 of them could be duds, or maybe 28 of them are duds, and two of them are wins, and those two literally make the entire portfolio's return, right? So it's again, it's about being very disciplined, in my opinion. I'm of the approach, I'd rather not throw out 30 bets and hope that two win. That's not my approach. I'm more selective. I think that if you are more disciplined and you poke holes, and maybe sometimes you miss, maybe sometimes you don't, you know, get a 17x in a year, which I missed out last year. But look, at the end of the day, sometimes it's worth it, because it could have been the opposite. It could have been 100% loss, right? So at the end of the day, you have to be very selective in what you do, very disciplined, and I think it'll come back to reward you. Slow and steady wins the race, man.
Agreed. So, what is a common piece of advice that you hear in the startup community or the investment community that you just completely disagree with?
Well, that's a tough question. I mean,
Yeah.
give me like an example. Give me an example. Give me an example of like something like you're hearing.
So one thing I hear is so for early startups, I'll tell you my perspective. Early startups, pre-seed, people tell you you got to go out, quit your job, and quit everything and do that. I think that's horrible advice. My perspective. I
Yeah.
think, yeah, I think you do go all in. You're either all in or not. But I don't think you go out and quit your job unless you got a spouse that's got benefits and other stuff. You have some decent plan for
Yeah.
just able to provide
No, I
yourself.
think I get what you're saying now. I think
You
what it
don't
is
say that, and you
you
might
got
be
to have. I think anything that you do, you can't look at a job as well. The one thing I used to tell myself, look, if you're working a job right now as you speak and you're listening to this, and you literally have to legitimately look at the clock every like hour to know when you're getting out of work, like just literally quit right now. Like quit right now. Like
well.
literally walk out the door.
I guess what I'm trying to say is this, like,
Yeah.
and this is different. This is why it's something that I phrase this question sometimes. This
Yeah.
what's a truth you have that very few people agree with you on, right? It's actually
Yeah.
from Peter Thiel's book 0 to 1, but but like that position is like I hold that position because if you have a job that's flexible enough to do some stuff, or you get some type of job that's flexible enough, or you have some type of other support system, just because I've learned that some people can operate from a system of like, okay, they have nothing and go out there and figure it out. Almost almost all of these really successful founders, though, large scale, had good support systems, like real talk, right? Mark Zuckerberg had it, Jeff Bezos had it. Like, so they tell people this advice that they didn't have, that they didn't go through. They weren't, yes, were they in college and out of their basement? Yeah, that's different than going out, having to figure out how to pay the rent, to just being in college where you can go back to your parents. I think it's very different. So I still think I think people should always be entrepreneurial in their mindset. I think it should never be tied to a job. I think you got to figure out a plan to have some financial independence. So, and then
Max.
there does come a time that you need to leave, but people say like, oh, I get this idea. I have a great concept. It's starting to have a little bit of
Yeah.
traction. I quit everything. I think
Never leave something until you have something else planned. I'd say,
just gotta
at
have
the
a
end of the
plan.
day,
Like,
yeah, you
exactly.
gotta have a plan. At the end of the day, you gotta have a plan, and it's also more about execution, right? You can have the best plan in the world, but if you're not ready to execute it, you don't have the resources to execute it, then don't quit that job yet,
But even if
because
you do,
you'll, yeah,
right? So let's
yeah,
keep it. So like, let's give the example of Jeff Bezos.
yeah,
Like Amazon almost went out of business. Okay, like
mhm,
people don't, it almost went out of business. It just had enough capital to survive these slumps. So everything. So what I tell people is, I believe in being an entrepreneur, being out there. However, your story is, you can't compare your story to anybody's story. One. Number two, a lot of these people that tell their story aren't telling the full story, right? And their stories from a narrative that
yeah,
sounds good, but in reality, they didn't come from the bottom, right? And
yeah,
I didn't come from the bottom, by the way. So it's not a bad thing. It's just something, or like these people usually come from a different. There's some, you have to have a community and a tribe and a plan. Bottom line,
yeah,
like even if you fail at a startup, which most people will the first time, no matter what, if you execute well, you have a community, it'll be fine, right? But like, I don't want people to go out here and just do this stuff without, and think that, okay, I'm going to be successful at 21 building a business. Like that, because the average, like, they see that story of Mark Zuckerberg, instead of saying that's the rule, that's the anomaly. Most
yeah,
successful CEOs are like in their 40s. Like,
mm,
but we tell this narrative and story that people get caught up. So anyway, that's mine. You don't have to
no,
answer
yeah.
that question, but I have like these are questions that people think is common advice or common things, but
No, I think my thing is you gotta have passion behind whatever you do, right? Like, regardless of whether you wanna, if you have passion to make hot dogs and you want to be a hot dog stand, like do that. You will end up having, 100 hot dog stands in New York, 100 in Texas, and making millions a year, right? But it may start with one, right? But at the end of the day, it's about having passion in what you do. So, my grandpa, rest in peace. He was the first Jew to go to Harvard Business School, and his father was the Secretary of Treasury of Jerusalem. So he's a very wise man. Has some books written on him, and the one thing that he taught me at a very young age was the sooner that you know what you want to be, um, the sooner you'll be successful. That's what he said.
Yeah.
And so he said, just pick what you want to do and stick to it and run with it.
And I kind
And
of asked this question, but I don't know if I fully got my answer. When did you
yeah,
know what you wanted to do with your life?
yeah. I mean, I think for me, it was right when I got that internship on Wall Street, and you know, I kind of got inside that boardroom and kind of saw the characters that were in there and the lifestyles they were living. And at the time, I was idolizing them, kind of like that Jordan Belfort figure almost, but not really though. And now I look at it and I look at them very differently now, but um, I don't know. At a younger point in my life, I guess there was things that mattered to me that don't matter to me as much now. But um, I think if you're out there to make money and generate wealth for yourself, you have to pick and choose your battles. But for me, it was about just being financially independent and having uncapped commission structure. And I didn't want to be the guy sitting next to someone else doing all the work and getting the same pay they were on a salary, right? I
Right.
wanted to be able to create my own destiny. So,
Yeah. So you talked about being younger. So I want to go to our lightning round questions. This is one of my questions I love to ask. So, what advice would you give your younger self? And
hmm.
what advice would you tell your younger self to ignore?
Mm. I would tell myself to slow down, slow down sometimes. Uh,
Did you take your
but
advice?
yeah, probably wouldn't. No, but slow down and probably not. The other thing is, before you do anything, I think it's prudent to categorize the pros and cons of a decision that you make, and that way, when you do something, you'll never look back and regret it because you've always calculated the risk and reward, and you told yourself, I knew what I was doing before I did it, and that was the decision I made. And then if an unexpected outcome happens, that's uncontrollable, right? But only you can. Someone once told me you can only control the controllables, right?
Yeah.
So you can only control the things that are around you and the things that you can control. Other things you cannot. So
And most things you can't control, actually. This is something.
you always have options. That's why I trade derivative options, right? It's optionality, man.
Exactly. But you can't control most things. You can control a few things, and that's all that matters. Like you can control how you respond, how you feel, your actions. You almost can't control anything else. Like that's almost it.
Yeah. Controlling your emotions is huge, man. If you can control your emotions, I think you'll be very successful. Controlling your emotions is huge. You cannot let your emotions, especially within trading, trading, $500 million book. If you let your emotions get to you and, the market crashes one day and, essentially you're selling off your entire portfolio and next thing you know, you're chasing it up. It's, you cannot let your emotions get to you. So stick to the thesis, stick to the fundamentals, stick to the reason why you're buying something. And I think that, you have to be very disciplined in that.
All right. So if we meet a year from now, what are we going to be celebrating?
Hopefully Sandbox AQ's IPO. Yeah. Yeah,
Okay.
man.
All right. Final question. If the last 5 years of your life was a chapter of a book, what would that chapter be about?
The beginning, man. The beginning. Yep.
The beginning of what?
We're just getting started. Beyond Alpha Ventures. I think Beyond Alpha Ventures, it's kind of my baby. It's, something that I think ultimately, you say what we'll be celebrating a year from now. We have a lot of things confidentially that we're working on behind the scenes. And potentially, maybe one day we'll be a public company. Maybe one day.
You can buy me. You have that. We'll have the podcast in your building. What we sell, that happens a year from now. I'll go there. Well, let's take the podcast there. Let's make it happen.
Yes, you can come here anyway. We have a studio here in the Trump building. Yeah, man. So what?
Now I'll hold you to that. I go to New York. Kobi, it was such a pleasure. Thank you for being a disruptor. Keep disrupting with us.
You're the man.